Right. Man. Still got to get used to that. I'm not the best. It's not the smoothest, but let's go through it. Yeah, how's everybody doing tonight? Can you hear and see everything okay? We'll do the brief audio check, make sure we are good to go while I get a few things set up on my end. Let's go through. Looks good, sounds good, everything. Yes. So let's just go ahead and dive into it tonight. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. As always, there's our top step risk disclosure in the YouTube chat. This is not a signals class. This is for educational after dark. Sorry, I was reading something. That was weird. This is for educational purposes only. Yeah, feel free to send your questions in. We have moderators who's going to be feeding me some of the questions that I do not get to. And last part of business, just reviewing everything that goes through the class. At the beginning of class, we do a rapid fire. We analyze Nasdaq, crude oil, Nikkei, and then we'll switch over to gold to see if we could find a gold trade at 8 p.m. Central. And then after that gold trade, last night we did have a Nasdaq trade actually, which is really great. But after the trade, then we'll do a brief Q&A and we'll jump into trader statistics. So that being said, I'm going to go ahead and pin to the chat my channel in Topstep's Discord. And if you would like me to review your statistics, go ahead and put them in that channel, just over here on Topstep X. As always, you could go to your performance stats, click on share, copy that link, and then put it into that channel that is pinned. What would even help me is tell me if it's an XFA or a combine or a live, and then maybe some details that will save me some time. So let's go ahead and look at the markets. And 12 hours ago, completely different vibe. 12 hours now, another huge move, right? It's just big move after big move here in the Nasdaq, and it's just absolutely insane. Ultimately, this is consolidation, but it's consolidation at an extreme level where it's plus or minus, 800 points on daily. And you can see here, this is a daily chart on the Nasdaq, and you could see the range, right? Where the low of this was the 5th, which was the Monday, 374 all the way to 18,400. So huge range on the Nasdaq. Tuesday it was the same, Wednesday it was the same, and then today, it was even a bigger range. We were down to 739. And we finished up towards the 500s. And, ever since we've started the open at 5 p.m. Central, we've went all the way up to 600s. And this is to have another almost 1,000-point move in a day. It is just, it's hard to wrap your mind around as a trader. And yeah, we've seen big moves like this in the past and during extreme volatile times, like 2020 when there is COVID and any dramatic event, right? But in terms of just pure volatility for the past couple weeks, it's been a trader's dream. And I say a trader's dream is because scaling down and opportunity, right? Because you can make and lose a lot of money really fast. And so that's why I said scale down, trade micros. And, I get traders all the time. I don't want to trade micros. It's not worth my time. You can't make money. Well, if you watch Slow Markets last night, I scaled in to a trade on the Nasdaq using micros. And the market's so volatile, you can still make or lose a good amount of money trading micros, as I showed you guys last night. Opportunities everywhere. Micros. Understand focusing on risk in this type of a market. So that being said, here we are. This is just consolidation, right? This is a mess. And the funny thing is, if we extend this consolidation zone out, you kind of see where you were this is kind of where we were, right? Where we were consolidating. Of course, the consolidation now, the past 4 days, is dramatically more volatile than anything that we've seen here back in, March or April. I mean, essentially, we're covering, all of these ranges, and we're covering it in just a day. Like, see, these are daily candles, and we have smaller zones and smaller ranges. Like, that's a really small range that we had in March. And then again, that was a big range at the time. This was a really big range at the beginning of April. Like, there's a lot of volatility, and then we had that massive sell-off. Well, you know what? We did that in a day. We're doing everything that we've seen in a day. It's not a big feat, as you can see. Like, massive sell-off at the time. Nah, that's just a day right now. So it's such an interesting thing when we put it into perspective. So where are we at? What can we go? Tomorrow's Friday. Tonight's officially Friday for the markets. What can we see? What can we expect? Where can these markets go? Specifically talking about the Nasdaq for right now. We're right back up at these highs. We've had this become a beautiful resistance zone. Does this become resistance again? You know what? Why not? It wouldn't surprise me if tomorrow we see another sell-off back down towards the low 18,000s. And maybe we've just finished Friday right in the middle. Excuse me. Oh, man. Excuse me on that one. What if we do just finish tomorrow right at the middle of this range? I wouldn't be surprised. Obviously, now that we're at the top of the range, I want to be, and everybody knows I'm bullish. I've been bullish for a while. Not a while, but for the past week or so, looking for opportunities to buy it. But if we start to zoom in on an hourly chart, here's what I'm looking at. So this is the same thing. This is on an hourly chart. And, we are right back up near these highs. It's an interesting thing to look at and watch. Maybe we see this channel forming again. Maybe we sell off. We come right back down into the middle. Maybe something like that. I wouldn't be surprised. It's been... if you were able to be brave enough to buy it down here, it was sell these highs, buy these lows. On a bigger perspective, I do like to see this for the bull side, where we made a higher low. This is a big pivot. This is another major pivot. And these are just massive moves. So this is a big win for the buy side, for the traders who are wanting a move up, myself included. We are right back to where we closed on Friday. So after a crazy week that we've had, you can see this was Friday night's close, and then we gapped down. This is the Sunday night gap, the Sunday open. We're above where we started this week off. So technically, since we opened on Sunday, we are, we're starting to sell off. We are pretty high up there. We were 200 points, but we are about exactly where we closed on Friday, and we're starting to sell off. So as I've been talking, we've sold off, 100 points. And did we really just what? Yeah. So this freaking market, guys. This. I've only been 10 minutes. Yeah, we've sold off since. Let's see. We opened basically there at 5 p.m. We went up. We touched 616, 618, and we're 100 points down. Yeah, this is just insane. I would not be surprised if we see a further sell-off. This is one thing I'm looking at. We honored this, bullish trend line during the power hour. So maybe we come down, honor it, and continue back up. If we do break through something like this, I wouldn't be surprised if we see... Maybe we see a move right back down towards 18,000, 18,100. Maybe we come back down into this range. There was something that I was looking at. It was maybe we just continue something like this, right? Where we've been finding support on this trend line. We broke down, support became resistance. We broke up. Maybe we come down and test this support trend line somewhere. I wouldn't be surprised. If we do, then yeah, I would be okay with looking for areas to buy, looking for opportunities to buy at areas of support. It's a little bit scary to buy. I'm going to be looking to be, when I do enter into a long position, and I want to make sure this is clear, is when I say I want to buy the dip and when I want to look for areas to buy, I'm going to wait for confirmation. I'm not going to be just typically what I used to do, where I would, maybe enter a trade in advance, being a little bit early. I would much rather have more patience, waiting for confirmation, waiting for, like we seen last night, we had this, beautiful pattern, and we had a nice break out of this pattern. And we just snapped it. This was this morning. Last night when I did that trade, when we had that trade instead of gold, we did have that beautiful breakout. And then, maybe a more probable one is wait for the breakout and then enter into the test of resistance. So maybe taking more probable trades, giving up some risk reward to take more of the probable trades on retests instead of reversals. So that is something I'm going to be looking at. But until then, yeah, let's see. Wow, we are right back down to 500. If I see an opportunity to trade this, I will, guys. Like I said, I'm a trader first, and if there's something that looks really, really good to me, I will place a trade. So this might be a trade that I take. I might take a long on the Nasdaq. Yeah, if we get down, if we find some way to get in long, or at least I say we, but I mean me. If I do see something that sets up and that I like, I will be placing a trade. Anyway, let's go ahead and let's take a look at crude oil. I'm going to start on the 60 minute. Ooh, crude oil did exactly that, right? What we were talking about last night in crude was we were looking for a pullback around this support and this support zone. It does look like we did get that, and we're pushing right back up. So last night was great. We were right here. I was looking for some type of a pullback to buy it. That was it. And we ran right to this resistance. This is now resistance. And it's looking a lot like last night, right? If we're just talking about pure patterns and pure statistics, this is the same thing. We had that huge rally, sell-off, consolidation, then another push down before we rallied. So maybe we do the same thing. It looks like we popped up to resistance, we sold off. And so maybe we do the exact same thing that we did last night. Consolidation, sell off to a support zone, and then rally. So maybe we see that again. Maybe we see consolidation, a sell-off down to a support zone. So I would see, dare I say, somewhere the 75.50s, the 75.50 level, and then look for an opportunity to try and get in long. And then some of the long targets would be 77s. Not sure. I'm going to be watching this. Let me look at it because we've been in such a solid trend to the downside. Is there any decent trend lines on here? This is something that to be a little bit nervous of. Maybe being patient and instead of looking to the long side, this could be something. And now remember, this is crude oil on the hourly chart. So maybe this is setting up for a beautiful short. Look at this. Like I would not be surprised. I mean, if we're talking about cheap trades and if we're talking about risk reward, then finding a way to short this to see maybe we get a deeper move, right? And a sell off back down towards these 73s. that is looking pretty dang nice for a trade here in crude oil for the past month. So this is going to be something to definitely watch. We're getting into a really key decision zone, it looks like. The question is going to be is, does this trend continue? Most likely, right? Trends continue until it breaks. Odds are the trend, go with the trend, right? So this is something that could come into play, is a sell-off and a continuation of this trend since July, the beginning of July. And yeah, so I think I'm not going to be as bullish in crude oil now that I'm looking at it a lot more. I would much rather look for opportunities to short this and catch a bigger move to the downside. However, if we do, and I just deleted that one. If we do, something I would much prefer is a break and then a retest. And then I'd look to get in on the retest. So much rather prefer a break and then get in on the retest. And so the trade I would prefer on crude oil, if I am going to look for a long, is going to be something like this, right? Break, retest, then get in long for the continuation. Until then, I think it's going to be to the downside, and I think I'm going to be looking for shorts on crude rather than longs. Now that I'm looking at a higher time frame and I'm looking at a bigger picture, the more I am liking a trade right back down towards these lows, maybe 74, 73, and dare I say, do we hold could. And now this is not. I don't know if I'd be able to do this on a Topstep account to hold a trade longer than a few days. I mean, of course, if I'm in my live account, I could reach out to the risk management team and request that, and I'm pretty sure they would. If I get into a good position into a short, and then take some profits if we do hit some targets. And now this is looking for a bigger picture. And so just because this is a bigger picture and saying, over the next 1 or 2 weeks, maybe we see a bigger move to the downside. And so that being said, I would start to take my day trades, right? And so I'm looking at that biased and saying, in the next 2 weeks, we could see a deeper sell-off in crude. And while we look to see that, or while I am planning to see this bigger swing trade to the downside, during the day, here at Topstep, we're day traders in and out positions in the same day. All my trades would be directional to the downside. So just because I'm a day trader and all my trades are in and out and I must be closed at the end of the day, doesn't mean this longer term bias doesn't mean anything. It means, as we start to sell off, if we do start to sell off, then yeah, I bias to the downside, looking for day trades, looking for trades that's going to be in the direction that I believe the market will be going into the next week. So that being said, let's take a brief look at Nikkei. And then I'm going to take a look at Topstep's daily levels and see how it compares to where we were looking. Sure. Nikkei just rallied really hard. Right? Another huge move in the Nikkei. This is the Japanese market, in case anybody's wondering. 6.5% up. We just opened, of course, at 7 p.m. Japanese market, Asian session. We are up and running. This became resistance again. This 35,900, 36,000 level became resistance. And over the past hour, we are starting to sell off again. This is a very, very volatile market. And I'm just going to stay away from the Nikkei. I know it's fun to watch and fun to talk about. But over the past hour, we've already moved, almost 2.5% in the past hour. So staying away. I don't even want to bother touching it in even a demo account. It's not worth it for me. But let's hurry and run through Topstep's daily levels. It's an indicator. We'll go Topstep. Now remember, this is a new to the Topstep X. We have, is there some more ones? Yeah. I'm liking this. So immediately the first thing I am starting to see is This is a very strong area of resistance. You can see there's a couple levels here. We are seeing resistance. So I'm going to be curious, this level right around, 385 is holding up. It looks like we kind of pivoted around there today. So I'm curious. I'm curious to see how this level is going to react, but I think this is a great, I like it. We've been hovering up into around these levels, as you guys could see. This is Topstep's daily levels, this yellow one and this green one up here. We're showing resistance. So now remember, it's not a signal. It's not saying buy here, sell there. It's just saying this area where these levels are has a decent possibility to be a decision zone, right? And I think we're kind of seeing that play out here. This top one, it looks like 18,558. Is there? Yeah, it looks like there's two of them right there. So we have a 558 and a 559 and a 521. So it looks like it's honoring them. It's good zones. So I'm going to be talking about it. I don't know if I will use them. It could be very helpful for newer traders who are struggling or just trying to learn how to trade. How do you do support resistance? These zones are are there for anybody to use, like not as a signals, but so far I like them. I like them. It's a little bit cluttery on my chart just because I'm so used to a naked chart, meaning no indicators, nothing on it, but very useful. It looks like that one, these two up here, there's a lot of resistance. If we break out, we could go up. If we reverse, we go back down. But the idea is that there is key decisions that can be made around these zones. All right, let me take a real brief look at crude oil, and then we'll go to gold. Crude oil. Ooh, look at this. Look, see, that's what I'm talking about. Look. That played out almost perfectly. So, like I said, it's not a signals class, and these are not signal levels, but this 75.84, it played out beautiful here, and it played out again beautifully at, today. It played out really well. And we have another high one up here at 77.25. And then the rest of them showing up, down here. There's two of them around, 75.23, 75.18. And it looks like that's where some support would be. And this blue one, the 74.81. See, it played out pretty well today. Yeah, that was this morning. Yeah, so that played out really well this morning. It's going to be interesting. I'm going to continue to kind of pay attention to it to see, I'm going to give my honest opinion and hey, are these levels pretty good? Are we? And so far they have been. They've been aligning pretty well the way that I view my levels when I'm looking for support and resistance. So, all right, next, let's go ahead and take a look at gold. So gold trade, 8 p.m. Central Standard Time. We have 5 minutes. This is an interesting one. Maybe I'm actually kind of looking at to the south side. We did break. We broke above this this flagging pattern that we were making. We broke above. This is a level of support and resistance. You guys could see here. Let me zoom in a little bit better so everyone could see this. So yeah, you can see there was a lot of resistance here, and I think there's might as well put these levels, these daily levels on there. There's no daily levels up here, which is interesting. There's a lot in this area, so we've broken through that. Once again, you could see how those daily levels really did play out as a key area of support and resistance, but there's a lot of resistance here. I would not be surprised if we catch a sell-off. And if we do see a sell-off, to find some type of support. I'm going to zoom in. Let's see. Like I said, 4 minutes left until the gold trade, or at least I'm looking for a spike in volatility. But let's see. Let me see on a hourly chart. Let's go back to an hourly. Yeah, this is looking bearish to me, and the reason why is we're just kind of hovering around this support and resistance zone, and we're actually finding some sellers. Now, it could do what it wants. Of course, at 8 p.m., we could see big moves, but it's looking a lot more bearish. We are pushing the lows. We did break through this. This is a 5 minutes. Let's watch it. I'd much rather us consolidate a little more and make these make it a lot clearer. The first thing I'm looking at is we have a little pivot point here at 61.1. We are lower low, lower low, lower low. We are making lower highs. So that's something that I'm watching. Another thing that I'm looking at is going to be on this 1 minute. You can see this is pretty clear and obvious, right? There's a down trend line that if we do break, maybe we do see a nice breakout trade and come up to test 67. That could be a trade where we break out and go and test 67. Or we break down. The question is, how would we get in? Just a few more minutes left. Let's see, I do like this pivot. A break below that, and then immediately we do have this one. So looking at these areas of support and resistance on this smaller time frame to help me understand. And then after that, the next one is going to be all the way down here at 56. So 56 is what I'm seeing all the way back down to there if we start to break these. The question is, how do we trade it, right? Torrent, give you a signal. And now remember, guys, this is not a signals. It's for educational. I love to trade it in front of you, and I think it's been great, and it's been great talking points, and to be able to answer some questions. That is always the question. Where do we get in? Let's watch it. We still have only a minute left. Remember yesterday had a huge move that I completely missed on gold. So we'll see. Coach, what time frame do you enter and exit? For this example, I'm using the 1 minute because it moves fast and it gives great talking points. But typically 5 minute, maybe even a 100 tick chart. It really depends on what market I'm trading. Revax, my trades are so random. I don't think they're so random. Why do you not really cover ES? A while back you were saying, yeah, I know. It's just there's so many markets that I could cover each night. I see ES very similar to the Nasdaq, and I like the Nasdaq. Okay, here we go. Let's see if we could get a breakdown. If we start to break below, I'm going to just go ahead and get in. My stop loss is going to be above that. So let's see. We start to push down. This is a little early, so a little more risk. I'm going to be okay to get into a second one using a sell stop. So a sell stop means it will get me into a short if we break this line. So I'm saying 2461.8. This will get me into a second contract short if we break below that. So right there, it did. I am now in 2 contracts short, risking $500. And immediately we are testing this next low. And let's play this out. Let's go ahead and we'll do this as a beautiful example. Do we turn around and hit our stop loss? Do we have this continuation down? Maybe we're looking for, well, we did come down and touch this first area of support. This area of support, we came down and touched it. The next one would be 56. So let's watch it. Finding some buyers, so curious to see if this is going to whipsaw me out. The first thing I'm thinking of is, do we move our stop loss to that pivot? So we started this pivot, 463.4, so 63.4. That is going to be the first question I have. Like, do I have my stop loss up here at 64.5, or should I move it to 63.4? The difference is going to be 530 compared to 310. And that actually does remind me, oh, come on. I need to go ahead and change this back to ticks, not percent ticks, save, because these examples are much, much better and useful when we're talking about ticks. So risking 26 ticks, or do we risk, say, 17? So 17 or 26. I'm going to go ahead and do that as a theoretical because I love, and that's the whole point of this. Tight stop loss. What was it? It was 17 ticks. So yeah, 15. Well, yeah, I think 15 would be better. Let me make sure that's right. Oh, come on. Yeah, 15. So 15 ticks. So there we go, 15. With a tight stop loss. So 15 ticks. See, this wasn't that random, right? I mean, this was not a random trade. These trades are very well planned out, trying to get in. Sometimes I get in early. I do admit that. And I pay for it, right? We're coming back down into this support. This is the support, 2460s, 2460 to 2461. And let's watch it. So let's walk this through. Let's see if we have this tight stop loss, 15 ticks. We have our original stop loss, 26 ticks. And then, of course, we're going to do a tight stop loss. So as soon as or aggressive trailing. So let's see if we could do an aggressive trailing stop loss. And what that means is we find some way to trail this stop really quick, whether it's a pivot, maybe someone will say, are ready to move your stop loss, 62 and a half, 62.5. Maybe you could trail it to break even already. I like to wait, more patient, have a wider stop loss, give the market some room, especially in this volatility. So let's watch. We're going to watch this. And like I said, we're going to probably have 4 or 5 different, lines on the chart, being able to journal out the trade as this happens, because this is for education. This is for everybody. This is for everybody watching how to walk through a trade, my thought process, answer questions as we go through this. Maybe you use indicators, right? I do see traders using indicators all the time. Maybe you have these rules based off of an indicator, like a moving average or something else. 2460 has small support. Yeah, it's very, very small. I mean, yeah, that's it right there. This zone, this is what I'm looking at. So we are finding that is becoming support, or at least both those times, right at 60.6 has been support on those 2 bounces. So far, let's go ahead. I think this could be a reasonable area to either do a tight stop loss, maybe at 62.5. Maybe you just move it to break even already. Maybe some traders have decided, okay, that's enough, move it to break even, and then you're not risking anything on that one. Should we consider using micros again for the Nasdaq? Yeah, I think using micros for the Nasdaq until things start to calm down a lot more. But I'll continue to answer questions. Let's focus on this gold trade. And I need a drink. Kind of slowed down a little bit. Okay, let's see. If we do push down, I think 61.7 would be aggressive, and then even moving it to break even. So, like I said, wanting to plot out everything and type everything out on here. Okay, so yeah, 61.6 so far. I think kind of just hesitating. Richard Harris. Regardless, it will go. You could say it most likely will go back down according to price action rules. You're talking about 53.48. You're talking about ES. Scott Martin, I do drink energy drinks. I need to stop drinking energy drinks. Okay, so we are pushing up. I'm going to go ahead. I feel like that would be good to say this is a very aggressive trailing stop. And if we did that, and if we've moved the trailing stop to, oh, well, it's already stopped out. So we're going to say this because I think that would be fair enough. It would be like plus 2 ticks. I think that's going to be fair enough. Someone who's really scalping this market, that was it. Aggressive trailing stop. Minus 2 ticks. So that was it. I'm going to put it right there. So it would either be that or up here. I think the majority of traders would have been stopped out if they're being very aggressive. I do like the trailing stop now. If we do start to break down, a trailing stop to 62.0, 62 evens would be a lot more realistic on this aspect. So maybe you had, it's not minus 2, it's plus 2, right? That would be plus 2. And so oh wow, immediately back to 61.9. So let's watch it. Aggressive trailing stop plus 2 ticks. What I really started to notice on these trades is an aggressive trailing stops have done pretty well. Like aggressive trailing stops have performed really well on this gold trade. It seems like we get a nice breakout in one direction, and we trail it. If we would trail it very aggressive, it locks in the profits, and it's avoided a lot of these turnarounds and a lot of these whipsaws that get us, and it gets our stop loss. So, so far the aggressive trailing stop, even though we got ticked out, plus 2 ticks, it's prevented the market from giving us a 26 tick stop loss or a 15. And I've seen that a few times on this gold trade because it's very fast. It's a breakout trade, and there's something to be said when there is a breakout trade. You want it to either break out, go here and right now, and if it doesn't, you want out of that trade, right? And then a time stop. So we could even start talking about a time stop. We could say 10 minutes. I would say maybe give it 15 minutes. Let's see what 10 minutes look like, and then let's see what 15 minutes looks like. So tight stop, I think this is going to be, that is going to be the next pivot. I'm going to go ahead and do this. This is now the new tight stop loss. So that is going to be, what is it? 8 ticks. So this is the tight stop loss. Normal stop loss. There you go. Normal trailing. Okay, normal trailing stop loss, because that is the pivot. That is a pivot. That is fair to me. I like this one. Normal trailing stop loss for there. So far so good. We're going back and we're testing this, 60.6. And we're starting to break it. I don't have any support. I mean, we do have some support. If we do break through all of this, then the next level could very well be, 24.56 and into these mid 50s. So let's watch it. Finding some support here again. But tight stop loss. The question would be, if you want to move it back to break even, that's very hard to do because there's so far, I'm not seeing a good reason to move it to break even. We're getting heavy. We're testing. It's looking really heavy for me. Gold is heavy. Big 15. How long have I been trading? I've been trading for just over 14 and a half years. I mean, it's been a while. Yeah, 14, 15 years. Getting that sell off now. Ooh. It's looking good. None of that, Richard. Oh, man. Yeah. You guys will never guess how old I am. I've been trading since I'm 18. We could trade when we are 18 years old. You could trade at Topstep. Hey, there's a good thing. Yeah, you guys are making me. I still haven't seen anybody. Nobody's guessed it yet. Nobody's guessed it. Nobody has guessed it. Wow. Still nobody. How are you guys not guessing it? Wow. Oh, there we go. There's somebody. Somebody finally guessed it. 30. I'm 30 years old. 30. Kind of hesitating right here at the 60 level. Yep, 30. Took you guys a while to guess it. Oh, chat's just moving too fast now. Yeah, I'm 30 years old. I really am. I feel old, and I know it's just me. It's just because it's one of those years. It's that year. Continuing to push lower. Yep, Richard guessed it. Yeah, so here at Topstep, you could trade when you're 18 years old. So yeah, that's what I do say. I started trading when I was 18 years old. But I've started learning about the markets since I was like 9 years old. That's all I'm going to say. If you've been around slow markets, you kind of know a little bit more of the backstory. Like I said, you can't legally trade until you turn 18 years old. Here in the United States, I lived in Utah, and here in the United States, you can trade in a parent's account as long as, of course, a parent or guardian is there and they sign, and there's a bunch of legal stuff that I just don't even want to get into. So 18 years old since I was 18. But, one of those fun things. Yeah, I used a practice account. So we're continuing to sell off. I do like this trade. Good thing I put this random trade on, right? This was just one of the most random trades. Yeah. We're not really breaking, and we're just, we broke through this. So I feel like that's no longer in play. It was not random. Revax. Well, I mean, it depends on your perspective. To you, maybe it's random. Come join me tomorrow during fast markets. Then you could see me trade my live account. Like I said, this is an 8 p.m. gold trade, and we've been reviewing and analyzing this trade for about 2.5 months. And until I feel confident and until I've done this to where I understand the statistics, I've already taken a couple of these in my live account. It's just one of those. Like I said, this is for educational purposes only, and I'm doing this for you guys. I'm doing it so we could walk through this. We could walk through it together. We can talk about, what about aggressive trailing stop? What about a normal trailing stop? What if we move the trailing stop to break even? Let's do that. Let's do a theoretical. Let's go, I'm going to do that. Normal trailing stop deserves to go there. -8 ticks. Boom. And then, I think now is a good one to where, if we move the trailing stop to break even. So I'm going to put a break even trailing stop. So break even You'll just stop. Break even stop, -0 ticks. Lucky Cat, what are we doing here? I don't know. What are you doing here? You guys are all, yeah. Rewatch it. We are trading gold. This is the gold trade at 8 p.m. Central. We see a spike in volatility each night at 8 p.m. And I like to play either a breakout or a reversal trade. You know, we did get triggered in on a breakdown right here at, you know, pretty much right at 8 p.m. We got triggered in at 2 contracts. We got in one, then we got into a second one for a breakout play. The main target for this play is going to be 56, this area of support and resistance. So this is purely for educational, and we've been walking through this type of a trade every night during slow markets. And yeah, that is the goal, and to walk this trade through in front of everybody, so that way we can answer some questions. Hopefully it helps traders learn. And yeah, Lucky Cat, maybe you're joking. I don't know. But I hope this also shows you guys how boring trading really is. It's the same thing, right? Like, correct me if I'm ever wrong. Every single night you watch slow markets, it's the same thing in and out. It's the same thing. Same exact setup, same exact way you move your stop loss, the same way you put your take profits, the same way you get into a trade, the same way you get out. From a pure trading standpoint, it's boring. You know, I could just sit here and it's the same thing over and over and over again, you know, rinse and repeat 1,000 times. That's the reality of it. And if trading's not boring for you, like if you get some type of I don't know, adrenaline rush or some type of emotions that are involved when you're playing trades, or when you're planning your trades out, or while you're in the middle of a trade, then you might be letting your emotions get to you. And emotions are one of the worst things when it comes to trading. It gets exciting only when we make money. Yeah, I mean, to a point, I mean, once you start doing this long enough, making money and losing money feels exactly the same. Like this trade, every trade that I do, make money, lose money, whatever it is, it's the same things over and over and over and over again. The nice thing is the markets aren't the same, but the executions are. So maybe that is a better way of saying it, is the markets are different. And I said this the last couple nights. Look, this gold trade, every single night, this gold trade is different. However, the execution, how you get in, how you get out, you know, how you manage a trade is the same thing. It really is. But the markets might be different. The way you handle the markets should be pretty dang cookie cutter, consistent, boring. Douglas, yeah. Well, yeah, that's, for me it is. For you it might be different. I don't know. We all see the markets we all see the markets differently. So let's see, this a break even stop looking pretty good. We did find support right below this. We came down to 59.4, and we're starting to go up so far. So let's watch. We'll continue to watch and see if we could get out either at break even or only -8 ticks. What do you make of the 5-minute in gold? Let's take a look at 5-minute. And then I'll get to some more questions. Let's see. Is there something else now that we're already in this? I mean, I did look at the 5-minute. It's the same thing. Looking for a push back down towards these 56s. So it looks like we are starting to... Oh, and that's it. Fast in, fast out. Right back up. So stop loss, break even. let's go ahead and I'm going to make sure that this is journal, normal stop loss, 8 ticks. So depending on how you manage, and this is another beautiful example, if everyone all got in at the same exact place, let's go through it. 3 completely different results, right? The first result, you could have made 2 ticks. The second result, break even. The third result, I got to move this one, trailing stop, minus 8 ticks, or even a fourth result. Maybe you still have your stop loss up here at minus 22 ticks, right? So just depending on how you manage this trade, 100%. So many different results on the same trade. So let me go ahead and go through this. We'll add our executions and we will save that. Beautiful. Okay. Does it not show my entries? Okay, I'm going to go ahead and take that and save. Save that picture. Perfect. So there's the journal. There is a beautiful example of getting in, getting out. Oh, where's that one not saved? Try that one more time. Okay. 3 results based off of this scenario for tonight's trade on gold. And now this one lasted 23 minutes. So 23 minutes, it could have either been +2, -0, or -8. And then there is also, I mean, was there an argument to buy and at least take profit? Was there an argument to take profit at 24.60? No, I mean, even with hindsight, I don't see myself taking a like even one contract. I don't see myself or any reason that would have said close one of these trades out for, as a take profit. Everything I'm seeing is 56. It's just this support was pretty dang close to even consider a take profit. It was just trail it for this example. So there we go. I think that's it for the gold trade. Let's take a look real quick what Nasdaq is doing. Get out of this, make it a little bit cleaner. Get rid of everything. And it looks like we're starting to rally up, right back up. Are we going to break out of this? If we break out, this thing could continue to just move. Another reversal. Pretty dang simple when you think about it, right? If you're looking to be getting into a long, right? With the beauty of hindsight on how this pattern was looking out on all these sell-offs, just buy it. I was looking for a deeper one. All right, let's take a look at gold or Nasdaq. And then we will review some statistics. Ooh, the good stuff. The stuff you guys want. Yeah, so that's going to be interesting. So let's get to it. Pinned at the top of the chat, we do have a lot of people already submitting their statistics. So go ahead. If you want me to review your statistics, go ahead and put them in there. We already got some. So I think that's going to be plenty for tonight. Let me get to some questions, and then we will take a look at the statistics. That being said, let's go ahead and get into it. Hey, Torrent, let's see your statistics, man. Let's put it here in this chat. We could pull it up. I don't mind. Torrent, I don't need... Yeah, this is about you guys. This is for education. Don't come into the chat and doing any of that. I mean, you could see my trading here. Look, my New York scalp session. Okay. You know what? You want to see my statistics. Here we go. I'm going to show you my statistics here on my Express funded accounts. While I'm waiting, I'm going to answer some questions if you guys really want to see my statistics. There you go. It's so skewed because there's not a lot of days. 1, 2, 3 days. So for me, it's just my Express funded account scalping not really much to look over. I'm trading micros, scaling into positions with micros, so having a lot bigger trades. That's it. So not really much to talk about from my statistics because I'm in my express funded accounts. But yeah, yeah. So there, if you wanted to see that, there's not really much to talk about on my statistics. There's a lot better ones that you guys have, and there's a lot more constructive ones that I'm actually starting to see here. But let's get to some more questions, and then we can dive into the statistics. Dakota, how would you rate price action from 1 to 10, and 10 being the worst? Richard Harris, I don't know what you mean by that. What price action? Will you give us insight on tick charts versus time charts? I will, maybe next week. That's a really in-depth thing that I want to go through because it's not just a really quick conversation to say this is the difference between tick charts and price charts. Outside of tick charts is a tick chart. If you're trading a 100 tick, then that's it. Then time charts is based off of time. Let's just keep that one for another time. I'm sorry. Would you follow VWAP on a 5-minute chart when trading on a 100 tick? Sure, that sounds like a decent strategy. I don't trade VWAP. Let's go ahead and look. Okay, I'm seeing a lot of statistics in here. I want to find a good one. Let's see. A class on setting up indicators. I'm probably not the best to do that class. Okay, here's some statistics. I like this one. I do like this one a lot. Let's go ahead. This is going to be a good one. This is an interesting one. Let's go through this. Now, I'm going to try and get through as many as I can tonight, and I'll continue to answer questions as we go through this. All right, let's get to it. Okay, this is something new. Great traders demand a great trade location. Make sure to look for opportunities where you can limit your risk and always place a stop on your trade. Coach T is amazing. This is an interesting statistics. First thing first, I love this is an express funded account, meaning obviously this is since May 10th. May 10th. I think this is May 10th or May 1st. So since May, express funded account, this trader, of course, trading it's more pressure than a regular, demo account or combine. This is an interesting one. Over this period of time, since May, plus $410, 52% winning trades, just under for a risk reward. A profit factor is just barely positive, obviously, by 0.04. Yeah, right there. Let's see. Best day percent of total profit. This is an interesting one. I'm just going to briefly go through this. It seems like this trader's trading small, like just very, very small. Lots of trades. So you're getting your money's worth. Let's just say that you're getting experience, you're getting time in the market in an express funded account. So that's always positive to see. Win or lose, making money or losing money, the fact that you're in an express funded account for so long is always going to be a positive just because you're getting time in the market, you're getting that experience, and you're getting the trades in. Experience, practice in an express funded account is really amazing. Total number of trades, 411. 411 since May, June, July, like 3-4 months. Okay, that's a little bit on the higher end, but not too bad. Number of lots traded, 529. That's good. It looks like you're averaging just over 1 contract per trade. I like this. About an hour for the trade duration. That is good. Sundays, your least profitable day. Most profitable day is Tuesdays, so your extreme's pretty good as well. Yeah, this maybe not so good, right? And this is why Nikkei is scary. Your worst trade is on the Nikkei, NKD, Japanese market. There's no micros. That is why the Nikkei could be very, very dangerous. and it's not for the faint of heart, where, your best trade was on a micro Nasdaq and your worst was on a full Nikkei. So obviously that's goes without saying. Maybe stay away from the Nikkei. Stick with something like micro, something you're used to, and that you could have avoided that really nasty, ugly day. And not too bad. You could see just if you, and I'm going to be seeing this a lot, I'm sure. If you're able to just cut your losses in half, this equity curve will be so much better. I do like the longer trades, the fact that you're holding trades longer. Let's take a look at this. Yeah, do you see just your worst days? Yeah, there's not really too much. I'm just going through this really quick to see if there's anything that sticks out to me. So far, I'm not seeing anything sticking out other than you're losing days. It looks like you're just letting it run to 1,000. But then one day you kept it at $3, kept it at $500. So that's something to be said. If you can keep your losing days, and that's going to be with everybody, just keeping everything small and consistent. I liked June. Looks like for June, you're not trading it every single day. You're being more selective on the days you trade. Still, $1,000 losing day. Mixed statistics on that one. Let's go ahead and pull up another one. Let's see. Oh, okay. Here's a good one. Express funded account since July. Let's go ahead and I think it doesn't really matter. We'll add it. $35,000 in this express funded account. Beautiful. Absolutely beautiful. I like this. This is the power of risk reward. Absolutely. Risk reward on this account. Look at it. Losing more than you're winning, 44%. You're only winning 44.86% of your trades. However, because you have a 2-to-1 risk reward, you have such an amazing profit factor. And look at this, 35%. Only your winning day percentage, you're losing. That correlates with each other. Look, 44.86. You only have 1 out of 3 basically winning days, but you've made $35,000. Now, the first thing I'm seeing is it looks like you started out really, really big. And so you had some really big 1 or 2 days at the beginning. And so it started to kind of die off there. So let's further look at this and see. Looks like it was on a Tuesday where you made most of your profit. You made $22,000 on a single day. Average win, average loss, best trade was $14,000 on one trade. And oh, wow. So this is something I like. So two trades on the Nasdaq. So just only 2 contracts. There you go. There is a beautiful example of why only 1 or 2 contracts can be very, very powerful. You don't need to be trading 10, 15, you don't need to be trading huge contract sides to make a lot of money. This $15,000 winning trade was on 2 contracts. That's it. 2 minis, 15,000 on 2 minis. And it looks like you entered long at 19,065 and you exited, 19,440. Let me zoom in because let's get this so where you guys could see it a lot better. So that's a lot better. So look at that. 2 minis, $15,000. Looks like you collect almost 400 points, right? Like 380 points on this trade. Amazing single trade. So let's take worst trade, 6,000. Yeah, look at that. 5 contracts minus 6,000. 2 contracts. Keeping it small. I love to see traders keep it small. Nothing too much standing out here. Looks like you're cutting your losses around, under 10 minutes, cutting a lot of your losses early, which is pretty good. I like this. This looks like you're journaling. You are journaling. I like that. That is a positive thing. But All of your profit was made on your first 2 days. That is very interesting. 44 trades on one day, 10 trades on this one. And in August, it looks like you're hitting a day or a loss limit, $1,000 loss limit really often. I do like that you're journaling. Journaling is very important. You guys, I do that every single night on that gold trade. I journal. And let's see, micros, you're switched to micros. I like that. Looks like you're trading micros now, keeping it small, not risking a lot. Even micros, look, 10 contracts on a micro, minus $400. Micros can be very, you can make or lose a lot of money on the micros. So I do like that you switch to micros. You're not giving back a lot of money. Look at this. Here's another example. 5 micros, $700. So, switching to micros in this type of a market environment continues to prove you can make and lose a lot of money. So I like that because it looks like you're able to manage risk a whole lot better trading micros. This one, look, there's the minis raising its ugly head. 3 minis. Those are some of your bigger losses. 5 on crude oil. Gold was a big winner. Looks like gold was a big winner for you. And that's it. All right, I like it. Beautiful. Not a lot of statistics. You made a lot of money really fast. And then you're starting to either, maybe you let that get to your head. Maybe there's a psychological thing. Whatever it is, I'm glad that you're journaling. Continue to journal. Continue to work on it. I love that you are trading in micros on this account. Let's move on to the next. We're trying to get through as many as I possibly can. Let's take a look at this. Someone says, Dakota, help me out. Okay, again, another Express funded account. I love seeing these XFAs. It's always great to see. Make sure we're getting all the statistics. $4,000 in an XFA. That is great. I love to see traders continuing to make money. Okay, there we go. This is one of those where you have a higher win percentage and a lower risk reward. Profit factor is still positive because you have that higher win percentage. So this is one where you would see your ugly days start to get ugly. Hopefully you don't get very emotional when you have these losing days. As you can imagine, a string of losses can start to be very emotional, very challenging as well. Whenever you do have a upside down risk reward where you're risking $2.14 for every $1.41 to make, you have to keep that winning trade percent up there. As soon as you get anywhere close to 50-50, things start to turn ugly and it starts to not do too good. Most profitable day, good. Just looking for standouts. Trade duration, I like that. 4 minutes isn't too bad. Positive equity curve, that's great. I think the main thing, it looks like you're more of a scalper, day trader. I like that. Let's see. It looks like you're holding your losers a lot more than you're holding your winners. It looks like the majority of your losses you are holding for, of course, a lot longer. And then you have a lot of winners that you're just cutting under. I don't know if you're moving your stops to break even or what it would be. But let's take a look at your days. Not too bad. I think this is a similar example, right? $1,000 loss, $1,000 loss. The nice thing is your winning days are pretty good, right? Where one bad day does not wipe out an entire week's worth of loss or winners. It only takes away 2, right? 2 to 1, up pretty close. One bad day, 2 days make up for it. And then you have, a couple good days that are in there as well, but not too much to go through. I see that you're going into micros as well. That's good. Some minis, but yeah, I think that's it. I like seeing these micros. Always love to see micros in your guys' statistics. Oh, let's go through a couple more. All right, we gotta, let's see. Okay, yeah, I'm gonna review this one. We're going to review this one. Let's go back up to the top. Let's go. So this one is August. This is a new XFA. So I want to review this one for a reason. brand new Express funded account, August. So this month is very early. It's very young. Okay. So I want to review this for another reason, because this is some good talking points. When you start a new XFA, whether it's emotions, your nervousness, whatever it is, it's hard to see this. It's hard to go through this. So I'm not going to go hard, right? Because I never want to talk traders down. But I think this is good because it's tough love. Like, we need to have tough love. And this is going to be a great learning for not just yourself, but for everybody here. Is brand new Express funded account this month. It looks like August 6th, so just a couple days ago. And you started out in a hole, and then it just kind of dug deeper, right? Not great winning percentage, but I mean, if there is some positivity, it's, average win versus average loss, right? 69 to 102. So that is really good. So I'd like to see that. That is a positive note. Not really too much in terms of statistics. I mean, there's not much to review in 3 days. Scrolling down here, this might be it. This might be where we're seeing it. Total number of trades, 74 trades in 4 days, right? That seems a bit excessive. 173 lots, that's, over 2.5 lots per trade. So I hope these are micros. We'll see when we get down here. A mix, like this is a mix of quick trades in and out. Let's take a look. So here's the 4 days, 500, 500, 500, 500. Let's take a look. So they are micros. So that's a positive thing. I mean, at least they're micros, right? Two micros a piece. So when I see this, and then you went to 5. So for some reason, it was 2 micros. Your very first trade was 1 micro. And then you went to 2. And then 1 and 2 micros. So you're sticking with micros. So, I mean, that is good to see. But then you went to 3, right? And then 5. And so you're increasing your size. And let's look at this. And then it's kind of mixed. And then you went to just gold. This was tonight. So you traded gold tonight on the gold trade, and you just went for it. Yeah, right at there. Entry price 663, exit 62. You went long. So you originally went long, and then you piled in short. So you were trying to just get in and out of gold tonight. You faded me at the beginning, right? So you went long right at 8. Interesting. So yeah, you could tell. So I don't know if this was just like a last chance of like, hey, this XFA is not doing good. I'm just going to come in and just follow somebody. Like, I'm going to just copy trade or fade or whatever it is. But do not let anybody else affect your trading. This is an 8 p.m. gold trade. We stress that it's not a signals class. Now, given, looks like you were trading micros since we opened up tonight. And then you started to struggle trading, micros in the Nasdaq. And then it looks like you just said, F it, going for gold. Like, when I read this, it looks like you're trading micros, you're trading your plan, you're starting to struggle. Then you start to scale up, right? 1 to 2 micros, scaling up, you're still struggling, and you continue to lose money. And then tonight, maybe it was the same thing. I might be wrong. And then, you finally got to the point where you just said, F it, throwing in a full gold, right? And so what I see here is more about emotions. This is a tough one. You'd be surprised on how many traders I actually do talk to, and I see that have something similar. Minus $500, that's not too bad. Still, though, it's just consistent. To me, this is very much emotional driven trading. I'd be curious to see what the combine is. Like, for example, how did you trade your combine? This trader, I'm very, very curious how you traded your combine. Like, is your combine similar? Were you trading micros in your combine? How did you pass your combine? And I will always preach, I know the team will always preach this as well, is, trade your express funded account the same way you trade your combine. So if this is the way you traded your combine to pass your XFA, then great, stay with it. It just seems a little odd to me where you're trading micros, and then at the end you just F it. Tonight we're going for it at the gold trade. I'm curious. It's very hard to say, is this different from your combine compared to your express funded account? But to me, could very well be emotions driven. So learn from this. That is the biggest thing. Just learn, understand, and move on to the next one, right? Nothing negative other than like we went through. Like, that's it. And I understand it. Let's go through the next one. You'd be surprised. We're not alone. We've all done something like that. Okay, here's another one. I like this one. This one's not. Hopefully did I already do this one? Let's take a look. I'm getting through more of them tonight, guys. I like it. So here's another express funded account, started at the beginning of July. So this is July 3rd. We have some good monthly statistics here. We have a lot more data to look at. So here's another one, right? And I'm starting to see this a lot. And this is maybe it's psychological. I'm not sure, but traders love to have a higher win percentages, and a little bit lower on this average win to average loss. So if there's a room for improvement, it's, money's money. You made, $5,600 in a month. This would be the thing that I would be looking at improving: average win versus average loss. As myself, as a trader, the first thing that I would say is, how can I improve my average win versus my average loss? So let's go ahead and scroll down. Your overall P&L is 5,600. Keep up the good work with this. Number of trades, 342. Hopefully this is micros. That seems very high. It looks like you're averaging 2 contracts per trade. So that's going to be interesting as we go through that. 35 minutes on average is great. The longer, I love to see traders hold winners longer. The average is that's beautiful, right? There is no wrong. And I want to make sure I'm getting a few questions in here, and I've seen a couple of them. Varo, what are our numbers supposed to be at? Everyone's going to be different. I see this all the time. I work with traders. I talk to traders all the time. Statistics vary dramatic. They vary very dramatically. They vary. So they just are from high risk reward traders to low risk reward traders, high win percent. Your statistics do not need to be an exact thing. The main number that we should all strive for is this: profit factor. It doesn't matter what your winning trade percentage is. It doesn't really matter what this is. Independently, this could be high, this could be low. If this is low, this needs to be high. And you could imagine it's like I don't know how a good way. It's like tuning a guitar. If you guys ever tuned a guitar or tuned anything, we're all just trying to adjust our statistics to get the one outcome we want. The one outcome we want is a positive profit factor and money. That's what we want. And we could get that in so many different ways. We could have a high win percentage, a low win percentage, a high risk reward, a low risk reward. This one has a little bit over 50%, which is 60%. So it's a high win percentage and a little lower of an average loss. So like I said, making money. There's traders who have a low win percentage and a high risk reward, and they're making money. This is the goal. The goal is to make money. How we get there, there's many different ways, but we're always looking for ways to improve. Like, that is the goal. Let's find ways to improve. And this is a great equity curve. And so that's what I'm saying is, if there's something to improve, I personally love to try and improve my average win versus average loss. Maybe this particular trader is like, man, this is very low for me. I like to keep this closer to 70%. So there's so many things that we could go through. For me, I'm doing this so that hopefully I could provide some insights. Hopefully I could answer some questions. And at the end of the day, it's up to you to decide on, what you want to do and what you want to focus with in your own trading. I've ran into surprisingly, non-surprising. I've talked to a lot of traders who straight up said, I don't know how to read my statistics. And I would just, coming from my experience, I'm like, okay, to me, that kind of makes sense. Traders that are brand new, who are learning how to trade, who are in an express funded account or a combine, and they're just kind of not sure how to digest and dive into their statistics and what do all these numbers mean on the screen anyway, right? Like, what does this mean? What's this? What's that? How can I improve? So hopefully, as I analyze these statistics in front of everybody, and we could go through them, talk about them, it gives that sense of, hey, somebody else has, is struggling in this area too. So I love doing this. It's been fun. I've learned a lot as well. Like I said, I'm absolutely not the best. And at the end of the day, hopefully you guys could just take my opinion and take this with a grain of salt, because that's what it is. So let's continue this one, and then we'll top it off with a brief Q&A, and then we'll go from there. So best trade, 3,500. Worst trade, 2,000. Looks like you took short gold. 3 contracts, $3,500. Good looking equity curve. Looks like you started out in the hole, and then you were able to grind your way through that. And yeah, average win versus average loss. When you do have an upside down, a lower, loss, or whenever this is lower than 1, it always gets me a little bit nervous, because we do see, a big deep dip, and as long as we're able to keep your emotions in check, just grinding out of these big dips, right? Like that ugly dip, because if you have like traders that do have an upside down risk reward, will go through this. Is it right? Is it wrong? It just depends on your perspective, right? As long as you're making money, it's right. As long as you could do it consistently, it's right, and it's what works for you. For me, I see, and I tend to see traders have go through more emotional struggle when they have a really high win percentage, because it means their losers, take out more than just a few days of their losses. So let's take a look at this. And yeah, you kind of tend to see this, right? You hold the losses typically longer than you hold your winners. This one, maybe that's fair to say. It looks like you're holding, some of your losses pretty dang long. This was 4 hours. I mean, it's 50%, not too bad. And, not too bad. I mean, 50%, right? 50-50, half your winners, half your losses. But 4 hours holding a losing trade could be very, very difficult, right? Holding a losing trade for 4 hours, maybe it was a winner and then you let it come back and go against you. But let's take a look at this. Yeah, not too bad, to be honest. You can see you have some 400, 200, 200, 600, and you can imagine, one losing day wiping up yeah, here's a good example for that week, right? This was a negative week. You had 4 really good winning days, right? Tuesday, Wednesday, Thursday, Friday. But then you just started off minus 2,000. So one day just wrecked that entire week. The exact opposite, right? You could have, some really good days that completely made up for 2 of them. And then this is all profit. I like to look at weekly. Let's see. And then here we go. So here's an example. Great. This is a great week for this trader. Really good trading week. Tomorrow's Friday. Just keep that in the back of your mind. You don't want it to turn out like one of these days where you just end the week off on a very negative note. So, trade you. Keep that in mind. Doing really well. It is Friday. Tomorrow's you don't even have to trade, to be honest. Good overall statistics. Solid. Nothing too crazy, nothing too dramatic. I do like that you're using micros. Look at this. There's a beautiful example for everybody here in chat. Trading micros. Micros. I love to see this. Trading micros in your XFA. See, you could use 10 micros. Still doing pretty well. And look at this. You've had some amazing trades this week. This has been a really good week in your express funded accounts, and you're trading micros. So there you go. There's the proof. I love to see this in this type of a market condition where the markets are absolutely crazy. You are crushing it in the micros and you are making money. So time and time again, we're seeing these traders. I'm seeing these are from you guys. This is from everybody in the chat who's tuning into slow markets, who's making this kind of money. And I love to see that. Chat, you guys are doing amazing. It makes me feel good to know that, slow markets audience is putting up the numbers and it's looking really good. And I love reviewing these statistics with you guys. So Nick, yes, 10 micros is 1 mini. Essentially, it's similar. However, the major difference, Nick, is you could scale in and you could scale out using 10 micros. 1 mini, you are either all in or all out, right? So there's a big difference. Even though the dollar value is the same, micros, you could scale in and scale out. Minis, it's just you're all in or all out. Yeah, and on Topstep X, there's no scaling issues, right? You could trade 30 micros if you want, because that's very similar to 3 minis. But if you ever get to that point, then eventually, minis are more logical. It just depends on your trading strategy, right? Here's a beautiful example. This trader's made $5,600 in your express funded account. That is a beautiful month. That a lot of places, that is on the higher end. Yeah, since July. So 1 month, a little bit over a month, $5,600. In most places, that is an amazing monthly wage, depending on where you live. What was going on with Topstep X this afternoon? Lots of weird stuff. I'm not sure. I was not trading I wasn't trading this afternoon. Commission to tick value ratio is worse on micros though. Yeah, the commissions are typically a bit higher on micros. So there's always going to be, positives and negatives with each. If you're trading a lot, then yeah, it would make sense to trade minis. But then if you are trying to scale in and scale out, then micros would make sense. It just depends on your overall trading strategy. In this type of a market condition, scaling down for me and for some others, if you're used to trading 5 or 10 minis, then trading 1 to 3 micros. Maybe if you're used to trading 1 to 3, I'm used to trading 5 to 10 minis, then I scale down and I use 1 to 3 minis. If you're using 1 to 3 minis, then scaling back down to 10 to 15 micros. I'm probably confusing everybody, but yeah, as you can imagine, scaling down micros is one of the best ways to do it. Dakota, what do you think about ICT? Is he a fraud? I have not seen ICT enough to say and to give my opinion. I do know that some of the traders that I do talk to mention him, and yeah, like some of those concepts, from my understanding, are valid. They work. There's no bad or good way to trade in terms of if they work, and if you could do it consistently, then yeah, do it, right? But I don't have an opinion on that. I don't know enough to give a valid comment. Yeah, let's see. I think that's it, guys. What are the markets finishing at? That would have been a good trade. Buying that would have been good. Dang it. Missed it. Okay, other than that, I think that's it. Remember, guys, the new shows that are coming. First of all, we have Coach Jay, who's going to be doing At the Buzzer. I'm excited to be seeing him on TopstepTV doing At the Buzzer. It's going to be 3:15 Central Standard Time, and if you don't know what it is, just tune in. It's awesome. It really is. So Coach Jay's doing that. Nick Vertick, he's going to be doing the Sunday. He's going to be doing like the Sunday Open, the Sunday Prep. That's going to be freaking awesome. I'm excited to see that. Of course, we have football coming into play, and there's that anyway. But Sundays at 4:45 for Nick for the Tick. And we've seen that one trader statistics where we're talking more about the emotional side, and that you guys probably seen, Eddie and Hoag talking about it. We do have, and they're going to be on Topstep again, Jared Tendler and Brett Steenberger. Steenbarger, I think is his name. They're going to be doing, they're also going to be doing an Ask Me Anything with Hoag. That's going to be fun. I will be tuning into that, because that's something, no matter how good of a trader you are always going to be working on stuff. And I think the psychology side and the mental side is number one. Like, you could be one of the best traders in the world, but if you can't keep it together mentally, you would just fall apart. I've went through the same crap mentally. I've been through mental roller coasters. You guys see me go through mental roller coasters as well. I'm not perfect. I struggle. I revert back to, combines and demo accounts and practice, and, markets changing. I try and change with it, and a bunch of other stuff. And I think Jared and Brett are going to be great. I know Jared's going to be on August 14th. 11 a.m. and Brett's going to be on, August 20th, also at 11 a.m. Central Standard Time. But other than that, until then, today's Friday, so I will not see you guys tomorrow. I will see you bright and early Friday morning. Until then, take care.